Next, we have a deeper look at the G20 finance ministers meeting. CCTV's Martina Fuchs spoke with World Bank Group President Yong and started by asking him about the possibility of a coordinated policy to stimulate global growth.
It's very hard to get all the G20 countries to take very specific, policy measures at the same time. But I think it is very possible for them to communicate clearly that there's been a very good discussion, people understand where others are coming from, and the commitment to continue to do everything they can in terms of fiscal, monetary policy, and structural reform to drive growth is a very important signal to the market. And I suspect that we will get that. We will get some strong statements about all of the different problems in the global economy were discussed, but in terms of fiscal and monetary policy and structural reform, we all agree that we're going to do everything we can to spur growth.
On the one hand side, we face weak growth in emerging markets. On the other hand side, we still have the global economic outlook at 2.9% for this year versus 2.4% in 2015. Is the lender revising its outlook?
Now, as we look forward, we look at stabilization and some signs of growth in the euro area, in the European region. Japan continues with extraordinary both fiscal and monetary policy, and we haven't seen inflation rise yet, but our hope is that as Japan continues forward with their structural reforms, that we'll see growth there as well. But it's been disappointing. The low commodity prices, which still have not reached pre-2004 levels, pre-commodity supercycle levels, are also a great concern, and very low trade numbers this year again. So it is a mixed picture. We're hopeful that we'll go from 2.4 last year to 2.9 this year, but again, it's hard to tell.
There are several financial risks which are on the rise, partly due to the Fed's interest rate hike in December, also higher borrowing costs and geopolitical tensions. Now, how can emerging markets in specific better shield themselves from those spillover effects?
I think the one message that's going to come out of the G20 is structural reform. So, structural reforms that are required are different in different economies, but they're difficult to make because they're politically unpopular often. Let's look at China. China is making reforms in the financial sector in terms of government services and practices, reforming very difficult to reform things like pension systems and the hukou system. But that is what's needed. As we've watched China, we think that there are things that are happening here that are very positive from the perspective of the decision that was made to change the drivers of growth. We do see consumption is up. We do see the service industry is now more than half of Chinese GDP. And this is why here in China, despite lower growth numbers, the fact that they've stuck with the choices that they made to move to a more sustainable but lower growth trajectory, the fact that China is sticking with those reforms, I think, is a very positive sign.